Hi there and welcome to Money Talks, where we take a look at all aspects of the rural economy as it affects you in the ag sector. Well, it's been another busy week. We're about to hear whether Alan Bollard will lift the OCR, currently sitting at 2.5%. Fonterra's lifted its forecast payout. Craig Norgate sold down half his holding in PGG Wrightson. There's the ongoing saga of the Crayford farms and much else besides. But first up, it's ASB's rural economist James Shortall with his expert opinion on the week that was in the markets. Well, James, let's first turn our attention to the global outlook. What's been happening over the last week? It sounds like there's been some good news with the US beef markets.
Yeah, the US beef market is going really strongly at the moment, and it went up to 180 cents per pound in US dollar terms over there over the past week, and it's really all about supply. Supply's well back, but when we put things into context, then we're starting to get to a level where we're at the boom period in 2008, and the prices are actually quite a bit higher now than what they were at the same time in that year. So the prospects for further down the year is looking pretty good. And
so why are those drop in supplies? Was it the harsh winter they've had there?
Yeah, they've had a harsh winter, and it's been a couple of they've had a tough year last year, and the cow crop's actually is back quite a bit at the moment, and they're just not seeing the cattle come through. So there's a few things that are going on there that are probably going to hang around for a while, which is positive.
Now, still in the States, the US Federal Reserve is meeting at the moment, and it's expected to release a statement later this week. What do you think we can expect in that statement?
Well, they have initially, over the past while, actually, they've had their rates down at the Fed funds rate down at zero, between 0 and 0.25%, and it's expected that they're going to keep those rates at very low levels. I've been saying for some time that they're going to keep rates at a low level for an extended period of time, but there's starting to be a few headwinds coming through for the US economy, and that does suggest that there might be a few moves later on this year. So that's why markets are sort of quite excited about what that statement's going to entail and what it's going to offer in the future, because it will have an impact on the US economy.
Yeah. So it's all about the capacity for people to borrow money, really, and what it's going to cost them to do that. Yeah,
well, they're going to pull back. I mean, effectively, if they are increasing the Fed funds rate, then that's going to increase borrowing costs, and they're actually signalling that they're seeing the US economy stabilise, and we are seeing signs of that at the moment. But as of yet, the Federal Reserve haven't come out and sort of made those statements themselves, and that's really the guide, I guess, in terms of the US economy and what's going to be happening there.
But if those rates are heading a little bit north, what impact would you expect that to have on the New Zealand dollar?
Well, yeah, the New Zealand dollar will be impacted by what happens in the US, and at the moment, we have been increasing because our official cash rate is 2.5%, and of course in the US it's at 0%. So there's quite a differential there, and that has attracted investors to our dollar over the past 12 to 18 months. And if the US Fed do start increasing the rate later on this year, then we may see the dollar creep back. But in the interim, we've got our own official cash rate, which is likely to increase. We're suspecting that we're going to see the New Zealand dollar increase against the US through the middle part of this year, and then fall when the Federal Reserve do make their move, which could be later on in 2010.
Now, we do have our next official cash rate announcement on Thursday. Do you think that in the meantime, even though you're talking about an eventual increase, that Alan Bollard will hold it at the 2.5?
Yeah, I don't think there's too many questions about whether he's going to move the rate at this meeting. Most economists around the market are saying that there's going to be no move. We're certainly saying that there's going to be no move, and the reasons for that, there's a few things that have been going on in the economy, and there's a risk that they're going to move a little bit too early, and I guess by doing that, then they would choke off the recovery that we're in at the moment, and there's a bigger risk in terms of that than there is to increase it now and see things pan out down the track.
So what in practical terms, however, will this sort of, in the meantime, static OCR have in practical terms really for the agriculture sector? What should our farmers be looking out for, I guess?
The things that are going to impact on the official cash rate over the next little while, we've got unemployment, so we're at 7.3% unemployment. We've got figures coming out next month. That's going to be a factor in their decision probably through the middle part of this year. So the Reserve Bank have said that they will be looking to increase the rate sort of in the middle part of 2010, and we're getting pretty close to that period now.
Indeed,
so it's sort of getting to crunch time, and we're sort of saying it's going to be July, but because there's a few things that are coming up between now and then. The other one is the budget, so farmers should keep a close eye on what what happens with the budget and whether there's some tax changes, especially for the housing market, and that will impact on what decision the Reserve Bank make. But for those that are floating, then they can expect to see increases in floating interest rates.
So how's the currency been trading over the last week? It's taken a bit of a battering against the Aussie dollar for several weeks now, hasn't it?
Yeah, well, we have increased against the US dollar. I guess there was some good news from Fonterra yesterday, of course, and that there was a bit of speculation beforehand, and the dollar crept up, and it was actually at sort of a 4-month high during part of yesterday. And against the Australian dollar, then we have also just crept up a little bit last week, and that was off the back of the Reserve Bank of Australia sort of saying that they're getting to a point where their rates are getting to almost to the top of their cycle. So the market has been expecting that their rates will continue to climb, but the Reserve Bank's pulled back on those expectations, and that's sort of taken the sting a little bit out of the Australian dollar, and that's why we've crept up a little bit. Yeah,
I just noticed we tend, in our reporting on currency rates, we tend to concentrate very much on the US, but of course we've got to remember Australia is our biggest export market, so it's pretty important that exchange rate between us and them.
Well, that's right, and when we've been very weak against the Australian dollar, so that has cushioned us somewhat during this recession. While we're strong against all other currencies, then Australia is our biggest export market. So,
absolutely. So a bit of a wrap up of the week that was in our local markets. James, any surprises here?
I guess the biggest surprise was the Fonterra announcement, so that's a very strong indication of what's happening in our economy, and it's going to be great for the economy. The dollar's been up a little bit, but I guess things that have been coming through in some of the agricultural markets have been positive too in terms of beef and of course in lamb.
And lastly, any movement in our main sectors over the week, sheep, beef, dairy?
Scheduled prices for sheep and for beef have increased slightly, and I guess it comes back to the mention earlier on about the US market and a few positive moves coming out of there, and we're actually sort of seeing that there could be some positivity for scheduled prices going down the track, and even coming into the spring for next season, then we might see a little bit higher than typically for that period of the year. So maybe a few positive shifts coming for the beef sector.
Thanks, James. Well, the Greek tragedy continues to play out, with things still looking pretty rough for them and the others in the unfortunately named pigs countries, Portugal, Ireland, Italy, Greece and Spain. And of course, Fonterra have given farmers, well, all of us, some good news with an upward revision of the forecast payout. But we'll get on to Fonterra when we're joined next up by financial commentator Brian Gaynor of Milford Asset Management. He'll be here on the panel to discuss the business headlines making the rounds. Welcome back. Well, it's been an interesting week. Craig Norgate doing a bit of fancy footwork, the official cash rate, the Crayfors saga, and of course Fonterra lifting its forecast payout for the current season. First up, Brian, Craig Norgate selling half of his stake in PGG Wrightson into a mixed bag of buyers. What are your thoughts on this?
Well, it's a rather sad saga, really, because if you look back 2 years ago in September 2008, the value of his shareholding was 260 million. Yeah. And when you take into account the shares that he sold last week, plus the shares he has left, the total value of those two parcels is only 54 million. So the value of his holdings in Wrightsons has fallen from 260 million to 54 million, which is a drop of 80%. It all started, if you remember, over Silver Farm Ferns, when they had a deal to acquire a stake in Silver Farm Ferns, and they couldn't raise the finance at the time. It was in the middle of the financial crisis in September 2008, and really it's been downhill for PGW Wrightson since then, although it has stabilised recently. But I'm afraid Craig Norgate and the McConnell family haven't come out of this too well.
And the share price, I guess, 56 cents a share, I mean, given what you've just said, is that a fair price, do you think?
Well, that's the market price at the moment, and institutional investors and most investors are a bit sceptical about PGW Wrightson at the moment. They've seen the trouble the company's got into over the last few years. It now has a major shareholder from China, and it's watching to see whether Tim Miles and the executive team can so-called resurrect the company. I mean, hopefully, it's very important that PGW Wrightson has a very good future, and it should have a very good future. But